Hey traders, Gavin McMaster here from Options Trading IQ, and I've got a question for you. When you trade condors and credit spreads, are you looking just at the expiration payoff graph, or are you also looking at the T+0 line? Because for me, the T+0 line is way more important. So today I'll teach you how to look at the T+0 line and how it can help you avoid some painful losses. I've been trading options for over 21 years, and I find the T+0 line is one of the most important things in my trading. So let's get stuck into it. Just a quick reminder that everything discussed is for educational purposes only and is general in nature. So what we're looking at here is a fairly standard iron condor on Apple. We're pretty well centered. The stock price is right in the middle of our condor, and we're right on top of that T+0 line. So the purple line is the T+0 line. That stands for trade date plus 0 days. Basically, how does the trade look as of today? Whereas the blue line is the profit and loss graph at expiration. Where a lot of traders get into trouble is they focus only on the blue line and they're not looking at the T+0 line. And I've got a couple of rules in terms of managing credit spreads and condors that I'll share with you in a second. But first, I just want to illustrate the difference between a short-term trade and a long-term trade. And this is going to be pretty similar no matter what strategy you're trading. But we're looking at condors here, and you'll see that when we compare a short-term trade, the T+0 line is fairly steep. If we think of this purple T+0 line as a hill, it's a very steep hill with very sharp declines. Now let's go and compare it to a longer term trade, which is the February expiration, which is around 100 days to expiration, which is a fairly extreme example, but I just want to illustrate the difference. So here we can see a very similar setup in terms of our risk and our placement. We're still right in the middle of the condor, but we've got a much less of a decline on our hill. It's a much more shallow hill. It's not as steep. And that shows us that small fluctuations in the price of Apple between, say, 255 and 285 are not going to have a huge impact on the price of the condor or our P&L. Whereas if we go back to our November position, we're going to see if Apple goes to 255, we're going to have a much bigger loss than what the long-term trade is going to have, which is only about $25. So let's go and look at the short-term one. And we can see here, if Apple drops to 255 today, we're going to be down about $300 on this shorter term trade. So everything with options is a trade-off. Obviously, with the short-term trades, we get very high theta, but we've got a lot of gamma or price risk, and we've got a much steeper T+0 line. So I much prefer this style of trade, which is much slower moving, requires much less attention, and we can leave the trade sitting there and not much is going to happen for the first few weeks. So when it comes to the T+0 line, I have a little analogy for you. And I like to think of this purple line, our T+0 line, as a hill. And we think of the stock price, the current price of Apple, as a ball. And right now that ball's sitting on the hill. It's not going to roll too much. It's not going to move around. Whereas once we start to get below about, say, 250, somewhere between 250, 255, the ball starts to roll down the hill and it starts to pick up speed and get a bit quicker and quicker. Or in other words, our losses start to get bigger and bigger. So we don't want that situation to happen. So what I do in terms of managing my condors is I'll set a price alert around halfway between the current stock price and the short strike. Now I could calculate that out if I want to be exact, but a lot of times I'll just eyeball it on the graph. And it's probably going to come in here about somewhere here around 252, 253. I'll set a price alert for that level. If that level doesn't get hit, I know the trade's more or less okay and I can leave it alone. If the price alert does go off, then I need to start adjusting the trade. I don't want to leave it till Apple's all the way down here at 235, testing the short strike to adjust. I want to adjust well before then. Same on the upside. I eyeball about halfway, probably about here, 287, 288, something like that. So as long as Apple is between about 253 and 288, I know the trade is more or less okay, and I don't have to do anything. I don't even really have to watch it every day. As long as my price alerts don't go off, I know the trade's more or less fine. So that's the main way I manage condors, thinking of this T+0 line as a hill and setting those price alerts halfway between the stock price and the short strike. Now, credit spreads are a little bit different because we don't have an even hill. We only have the one side of the hill. So we can't really use our ball on the hill analogy because where the stock price is currently, the ball is going to start rolling down straight away. So we can't use that analogy, but I still will use the halfway point as my alert. So somewhere about here, 190 for this particular trade. And as long as NVIDIA stays above 190, I know the trade's okay. I can leave it alone. Might be in a little bit of a loss situation, but I don't need to adjust until the stock gets to about 190. Again, I don't want to leave it until the stock gets to 180 because by then it's too late to adjust and too difficult. In terms of that T+0 line, let's look at another extreme example. So this is what I'm going to do actually is turn off the expiration payoff graph, and I'm just going to look at the T+0 line. This is our November 16 delta put spread. Now we're going to look at an extreme example, go all the way out to June next year, similar delta, and we can see a much flatter T+0 line. Let's actually go back to our Apple condor and do the same thing. So let's start with our short-term position. Has a very steep hill, a very steep T+0 line. Whereas if we go out to February, we can see a much shallower hill and much less steep declines on the upside and the downside. Now, the same thing is true with butterfly spreads as well. Any trade really that's longer term is generally going to have a much flatter T+0 line. The last example we're going to look at is a trade called the rhino. And this is basically a broken wing butterfly on the Russell 2000 index. Very popular income style of trade. And some people call broken wing butterflies or rhino trades vacation trades because you can put them on, you can go on vacation for a week and not a lot's going to happen. We can see this T+0 line here is very, very flat. Not much is going to happen in this trade between about 2,400 and almost anything on the upside. Doesn't matter how high the Russell's going to go. There's really no risk on the upside. So very, very slow moving, low gamma trade. So that's indicated there by that T+0 line. Again, if we were just looking at the expiration graph, we wouldn't get a full view of how the trade's going to perform over the next few days. We're only getting a view of how the trade's going to look at expiration. That's where that T+0 line is so important. What we can also do with any trade is change it to a T+7 or a T+14. So trade date plus 14 days. And that will give us a little bit of an insight into how the trade might look 14 days from now. So that's going to take into account time decay, but it's not going to take into account any changes in implied volatility. So let's have a look. So we can see here, you can see exactly why they call these vacation trades. This purple line is looking now 14 days into the future, and we can see that there's not really much changing with the trade at all. So really, really important to look at your T+0 line when you're looking at trades, and even look at your T+7 and your T+14 line and pick spots on your graph to set those alert points. With a trade like this, I really don't need to set an alert until about 2,400 on the downside. And on the upside, I don't need a price alert at all because there's no risk on the upside. So thanks for watching. If you found the video helpful, please remember to like and subscribe. Reach out anytime with questions and have a great day.